The Australian dollar has been contained to narrow ranges again this week. The first half of the week was dominated by caution. Ahead of key US-China trade talks in Washington, the US administration announced visa bans on and a blacklist of Chinese tech companies, accusing them of being implicated in human rights violations. The blacklist bans these companies from doing business in the United States. That announcement came just as working-level preparations were taking place for high-level trade talks due to begin Thursday in Washington. That is the first time the US administration has cited human rights as a reason for action. Past moves to blacklist companies such as Huawei have been taken on national security grounds. While the US said that the action is unrelated to trade negotiations, it understandably alarmed markets, the announcement inflaming US-China trade tensions and tempering the odds of a trade deal. Indeed, Chinese officials reportedly narrowed the focus of talks and played down the chances of a deal. Also souring sentiment was a surprisingly large 5.5% fall in the Westpac Melbourne Institute Australian Consumer Sentiment Index for October, sending it down to its lowest levels since July 2015. By the middle of the week, the Aussie dollar was trading down in the low 67s, hitting a low of 67.06. The Australian dollar's fortunes improved through the back end of the week as hopes for a mini trade deal improved, but not without some heart-stopping volatility on Thursday morning on reports that the Chinese delegation would leave talks early after just one day instead of 2 days of talks. US stock market futures swung up and down 1% 4 times in several hours amid conflicting reports about whether China's delegation would leave early or not. Reports that China's deputy-level talks yielded no breakthrough and a possible lifting of restrictions on Huawei. A comprehensive deal remains unlikely, Chinese officials not yielding any ground on key US complaints around forced technology transfers and state subsidies. But talks between key US officials nevertheless still went ahead and encouragingly seem set to continue on Friday. Officials seem set to be inching toward a narrower partial accord that might revolve around pledges by China to maintain a stable yuan and increase purchases of US agricultural products in exchange for some relief on tariffs, specifically suspending the planned increase in the 25% tariff on $250 billion in Chinese exports to the US to 30% on October 15. By week's end, the Australian dollar recouped earlier losses to be largely unchanged for the week at 67.65. The week ahead promises more volatility. The local calendar includes the minutes for the RBA's October meeting. The RBA cut rates 25 basis points to 0.75% and said they would be prepared to ease further if needed. Expectations for a follow-up RBA rate cut in early November are finally balanced, markets pricing in a 50% chance. The September Australian employment report on Thursday will also be closely watched after the August survey showed unemployment rising to a 12-month high of 5.3%. By early next week, we'll also know the outcome of US-China trade talks. A partial trade deal would be a very good outcome given the early week tension. But if the tariff hikes proceed as scheduled on Tuesday, the Aussie dollar should remain under pressure as a preferred proxy for US-China trade relations.